All right, in this video today, let's talk about how you can possibly end up staying in your trades longer, okay? Now, one thing for sure you have to understand as well is that we as retail traders do not predict nor sway the market in any kind of way. It's all left to the banks and institutions. But as a retail trader, there are techniques or strategies that we can use to allow us to be able to stay in trades longer, to pretty much maximize the possibility of our profits, okay? Especially if you are like a micro futures trader, whether you trade the MES, the MNQ, the micro markets or instruments, there's a certain technique, okay, or strategy that I use that I've talked about here on the channel. It's a way to be able to trail behind price, and it's called the trailing stop loss strategy, and I'm going to go over that today with you so that you can kind of maximize your profits when you are in a trade, whether up to the upside or to the downside. I don't want to spend a lot of time talking about this because it's very simplistic. It's very it's kind of a no-brainer strategy. You should kind of know, of course you may have some target areas in which you may be looking at taking profit at, but this will work if you are into a trade and have multiple contracts and you take most of your positions off. Let's say you're looking to get maybe 10, 15 points run on the NASDAQ, and you say, okay, well, I'm going to close out, all my contracts except for one. I'm going to let that last one be a runner. I'm going to show you a strategy which works if you put the time into the understanding how it works. All right. So the market is, all we really need to do is to pick which way the market is moving. Is it moving to the upside, to the downside? But we're looking for pullbacks. This is for all those out there trading supply and demand to either a key area, which is high probability, which I talk about, of supply or demand. And the setup I'm going to show you today is a supply setup. The demand setups would work in reverse or inverse of or reverse of. But you have to understand what to really look at first and foremost, and that's depicting which way the market is moving. Now, that's all left up to and tied to structure, because you need to know if the market is running to the upside to where we're constantly breaking structure, meaning taking out new highs that the market made, then you should only be looking for key areas when the market pulls back to high probability demand zones, and then vice versa if it's moving to the downside, breaking structure lower, meaning taking out lows, coming down to the downside, making a pullback, breaking structure, coming lower, meaning taking out the most recent low. That's classified as a breaking structure. Pulling back to a key area where that market started to originate at, to where it made a swing or started to force, have a great momentum to the downside, making a bearish move. Okay. So then we're looking for pullback to a key area of supply. So let me show you right quick. If we look here at the market, it was bullish the last few days. And then the 13th, 14th, and even into the 15th, we see this channel to the downside. Now, for all those that kind of have a hard time, visualizing it, I mean, you should be able to see this. I mean, we made a high here before coming back down, making a low, breaking structure to the downside here, pulling back, making a lower high. This is the most critical part right here. It makes a lower high, and then it takes out these lows right here, making a new low. So this is kind of like a reversal that I talk about in a lot of video content, which makes this at that point to be classified as a major high. All right, so I talk about this because this is like a shoulder, head, and shoulder pattern right here, and it's breaking to the downside. Now, when it pulled back here, it did take this area here out, so you may be thinking, okay, now I need to wait because I'm not sure what it's doing because it's re-breaking structure back to the upside. Is it going to come back up here and take out this high here? It didn't. It came back down and folded to the downside, and it took out this area of this low here. So as long as it's breaking lower, then we'll look for pullbacks to key areas of supply. Okay, so when it did that, it did come down, break structure here to the downside. You do have this demand area here, which the market did react off of because it is a high probability area with a gap or imbalance attached to it. Those are the same thing. When you hear me say gap or imbalance, I'm talking about the same thing. And if you're kind of lost when it comes to the difference of high probability versus low probability in terms of what I look for in the market, then please watch some of the video content. If you go to the homepage here on the channel, use that little magnifying glass. You can query or search certain topics you're interested in video content will pop up, okay? So go to the homepage, whatever topic you're interested in learning about. I'm pretty much sure I've covered some content surrounding it. But yeah, this was a high probability demand zone because the market broke structure right here above these highs right here when it pushed higher. So it broke up. It did come back down, but at this point when it's moving to the downside, we're kind of, we're bearish to the downside here, but the thing about it is be mindful when you're coming into a demand zone below you okay, below E, especially where it's breaking structure lower, all right, and is already started to reverse to the downside. Be careful about, kind of counter trend trading when the market taps into a demand zone below, and then we just have done something already to the downside, which is being reversing to the downside. So I would rather look for short opportunities versus long. And I tell people this all the time: why trade in the opposite direction, meaning in front of a moving train? Okay, the market is showing you is bearish here. Why would you want to be going long? I'm not saying you can't. It's a counter trend trade, but again, you're moving in the direction opposite of what's taking place right here, which is the reversal. Now, let's get back on track here and talk about the low, lower, high, breaking structure here. Look, this is a beautiful area of demand, right? Supply right here. Again, supply is no more than just aggressive selling. We have multiple stacked up red candles to the downside. The market broke below this low here. Let's take this off right here so we can get a better picture. Broke below that low right there, came back, tapped into this area right here. Now, I like this area for one because we have a bit of consolidation right here. Let's bring this box out to the left a little bit, where it's kind of zipping. When you see the market was zipping at, that means the market has consolidated and it's trying to decide which way it's going to move. So, it came down, pushed up, came down. So it's consolidating here, and then it makes a run to the downside and break structure. Now, I like opportunities like this because in most instances, when I see consolidation taking place right here, this was the banks right here. Okay, they decided at this point right here to move the market lower with a aggressive force and momentum, push to the downside, packing on or stacking a lot of orders to push the market lower right there. Right, so you got to think about it. Did all orders maybe get filled right here? Maybe not, But this was, when you see things like this where the market is really zipping at a certain location and then it makes a move. That's them consolidating and then making a move to the upside or to the downside. That is the banks or that's not retail. That's the banks or institutions. The market pulls back to this key area of supply right here. And then I'm interested at this point to look for an opportunity. Now, getting into where we're talking about the trailing stop loss strategy. All right. So the moment the market pulls back to this area here, I always mark up and start with my higher base chart. Breaking structure, pull back, bit of consolidation, pull back here, aggressive area of supply on the higher range chart. I mark it up. Okay, and I do trade range charts, not time charts, okay? So the market pulls back, but that's not the last approach. What I'm doing then is now say to myself, I got the higher range chart marked up at the supply zone, which is high probability. Then I'll move down to my lower range chart, my entry chart, which is my 24 range chart. Now you can see as the markets were tracing right here, this is what it looks like on the 24 range. It taps into our supply zone on the 120 range chart. What I'm looking for now is for the market to really basically show me that it still wants to push to the downside with bearish force or momentum. That's where I start looking for breaks of structure to the downside. Lows, lower highs, break structure, pulls back. So it broke structure below here. It broke some structure here below here as well. And right here below here. So we come down, made a low, lower high, broke structure below these lows, broke it below these lows, pulling back to a newly formed area of supply, which is supply, and we're moving in the direction of what just took place on what we see taking place on the the higher range chart. Okay, we're pushing to the downside. So supply within a supply and supply, supply on the higher range, supply on the lower range. Now, here's the thing. Once you are into the trade, all right here, as it pulls back to the lower range chart supply area, I'm looking for rejection to go short. I'm going to aim for these lows right here, but ultimately I'm really going to be looking at my higher range chart as well to see where can it go down and test. More likely this low right here. Now, it may not do it instantly, okay? It may not do it instantly. They may kind of play around here, consolidate before they make a move. And they did here. They kind of consolidated. They pushed up, tapped into the zone, consolidate, and then made the run to the downside. Again, consolidation areas where they make a thrust or a big push to the downside, that's the banks and institutions. So this is the consolidation area here. You see they run to the upside some, then they come down, they kind of, they're stalling out in this area right here. You can see it. That's consolidation. So those areas where it pulled back to that lower range chart supply area, and we're, bouncing off or rejecting off of a higher range area, I'm interested in going short. So when I go short from this area here, yep, it comes back. My stop would be like on the back end of here at the point of rejection at this lower range supply area. I would be interested in going short. So let's say you got to the trade, you took most of your contracts off right here, you locked in at break even, and then maybe it stopped you out at break even. Or if you left your stop here, which I wouldn't do, but if you did, then it maybe stopped you out. Then it just comes back up, it's retesting the high here to go back lower. Then at that point, you can look for opportunity to continue doing what? To going short again. All right, and here's another opportunity. It makes a run to the downside. Let's say you didn't take this trade or you got stopped out here. It makes another run to the downside on the lower range. takes out structure here, pulls back, comes back down here. As you can see here, slight break of structure here, taps into this supply area right here on the lower range chart. You can go short from there. So let's say you're short from this area right here, and then it makes a run to the downside, right? So it makes its first low, pulls back, and then it makes another run. So move your stop from where it will be like right here, because technically your stop would, if you take a trade right here, let's say this was a supply area, just to show you right here, your stop would go on the back end right here where you got into the trade at. Let's blow this up a little bit. Right here. So then it runs to the downside. Your stop is here. Maybe you can move it down to, break even where you enter the trade at. It pulls back, makes a new low here. You can move your stop from here to here. So basically each time it makes a lower high, okay? Low, lower high, makes another run to the downside. Move from here to right here, okay? Then let's say this is the origination point where you got to trade at. So you're trailing behind price. So now the market, as it's coming down, you're locked into profit from here to down to here to now down to here. You've got all this profit where you're trailing, moving your stop down. If the market comes back up and it stops you out there, guess what? You stopped out in profit, okay? Not a loss, all right? I'll show you another example right quick. All right, see that consolidation point right there we just talked about? Tapped into it. Market break structure on the higher range, again, the 120. Breaking structure again. Now here's two supply zones right here. This one and this one. I would prefer this one more so because the market, this is the point where it kind of consolidated and then they started feeling big orders to the downside. This is when you see consolidation and then they make a move, that's pretty much going to let you know and tell you that the banks and institutions are at hand here and they're the ones that are making the move here and they're packing on the orders to go, to the downside, and they break structure here. So yeah, they rejected here, but this is the one that really I would trade from at the top up here. And this is the origination point from where the move to the downside happened, where they broke structure below these lows here. So this is the leg to the downside. This makes the point to where it makes more sense because this is where the move really started at. Market comes back up. I mark that zone up, okay? It's a high probability because we have a gap attached on this candle right here back to the zone. Mark it up. All right, and then as it's retracing back to the upside here, let's look down on the lower range chart, which I believe this is around, I think 2 o'clock sometime. Yeah, around 2 o'clock. Let's go to 2 o'clock time period, which is right here. So right here, okay, so it taps, basically the zone would be right here, in this area right here, on the higher range. It makes a low, lower high. We break lower here, breaking structure, okay, coming down. This is a valid demand zone. I keep saying demand, guys. You should know what I'm talking about. Supply to the downside. If you're going short, we move to the downside, supply. Supply area right here, aggressive selling. Again, a bit of consolidation right here. This is the banks on the lower range chart. Pulls back to supply right here. I'd be interested in going long from here. Again, here is the trading loss strategy and how we go about doing it. We get into the trade when it pulls back to this zone right here. All right, mark it up. Oops, sorry. I didn't mean to grab that tool there. Let's grab this one right here. Okay, taps into the supply zone. We're going short. Right here, makes a low, takes out structure right here. When it makes its first lower high from where we got to trade at, say, makes a lower high. This is a lower high compared to this one. It didn't take out this high. Then makes the low and breaks structure again. I'll move my stop from here to here. Each time it makes a new lower high, I'll move from here to here. Okay, so by now, when it starts running back to the upside, you have the option because they kind of started consolidating right here. You have the option to either stay into the trade and see if it's going to make a new lower high, which it did right here, but they didn't take out these lows here. So if they come up, okay, after they make this low here and your stop is really maybe right here, and maybe you move it down to here or here off these smaller swings within the larger swing here. But once they get down and make this low here after breaking this area structure, and then they pull back and make a lower high here, yeah, you can go ahead and maybe move your stop down. But I technically like to see them make a new low right here. So if they make a lower high here, but then don't come down and break the structure right here to the downside or take out this low, and then they go back up and your stop is right here, maybe go ahead and get out the trade because maybe if you see consolidation taking place right here and then they go back to the upside, they're going to come up and start maybe want to take and start running some of these areas back to the upside. And maybe there's some liquidity resting up here that they want to take out. Okay. So in that case there, you would have moved your stop from here to maybe down here in this area here and locked in profit. All right. And go ahead and get out the trade if you want to, or if it comes up and stop you out, you're still locked in profit. This is how you can trail behind price, especially if you taking most of your position off and maybe have 1 or 2 contracts running. So hopefully this video, helps you out and helping you grow your small trading accounts out there, whether you're trading the micro NASDAQ, the micro E-mini S&P 500, whatever it is that you're actually trading when it comes to the micro instruments or contracts. This will help you stay into your trade and grow your profits a lot quicker, because now you're able, instead of picking maybe 10 points and getting out and closing all your contracts out, you can start to look for maybe another 10 or 20 point run to the downside or to the upside and trail behind price with that stop loss. All right. So hopefully this video helps everyone out there, in a way to be able to help them grow their small accounts again. All right. So I cover information like this and really go into detail about breaking down the strategy in terms of my trades that I actually take. So if you join the Discord, the link is down in the description portion of the video. First link there titled Discord. Click on that. You can join. It's free. Come over and join us on the trading floor. That's where we as traders, we share trades that we take. And a lot of people will, explain why they took that trade, whatever the case is. I explain mine. What I do is I'll post my entries, and I will make private content for the private community members who are either the elite or the ultra elite supporters. What I'll do is I'll break my trades down. And there are tons and tons and tons of videos after video after video of my trade breakdowns. This is where the cornerstone, the blueprint to how I actually trade is laid out, because I go into detail about structure, price action, my thought process behind the trades I take, where to place stop loss at, where to place your profit targets at, so that you understand when you see these actual setups that I'm taking and posting over in the Discord, you watch that video content, you'll grasp an understanding of why I took those trades, and for you, it'll help those out there that are interested in looking for setups just like this, because the urgency and importance of back testing and forward testing the strategy and how I trade is definitely important. Any strategy is, no matter where you learn it from, okay? But I provide that video content. Now, I'm not here to mentor anyone. I just share my personal way of how I trade, and it's all tied to really within the elite or the ultra elite for those members. And all those out there who will support the channel, who are either an elite or an ultra elite, I thank you for all, your comments, your positivity. I thank everyone for spending time watching the video content that has helped so many people pass, evaluations or challenges for those that are prop firm traders, and even those that maybe have a personal account that are growing their accounts now. I don't expect everyone to stick around forever. Once you've learned something on your own, because that's the best means, I believe, how people can actually learn is watching video content, stuff that actually works, and educate themselves. Take the pen and pad. I provide the tools and what you need to know, at least that will have helped me, because I know that not everything is going to work for everyone, but sometimes, it's either you kind of spend a little time seeing if it's going to work for you, chop it up. If it doesn't, move on and find something that does. But I provide a personal way of what's been working for me for years and what has been working for other individuals that are part of the Discord community. You can come over and ask, But again, if you're interested in becoming an elite, okay, remember, what do you receive? The trade breakdowns, the video playlist, and a great video covering market structure, okay, for those that are struggling with that concept. Very inexpensive. The link is down in the description portion of the video. All right, it's titled Ultra Elite Supporter. Click on that. A few tiers will pop up. Okay, now if you want to become an ultra elite supporter, you receive everything I just discussed, plus the live recorded trading sessions where I'm recording myself trading live, and you can see the entries and trades that I'm taking, where I'm taking the trades, why I'm taking them. I explain in detail, and you see the full rundown. Okay, but outside of that, the link is down below if you want to join and become a supporter here on the channel. Very inexpensive. I'm just here to help people and share with the knowledge and pass it forward, because look, no purpose of holding something and harboring it, and the goal in life is really to help people get further in life, help them get further in life. All right, so when someone's struggling or you see them have an interest in something that they want to learn, and you have the key and the knowledge, the information there, pass it up forward. They do what they want to do with it. If it works for them, it works. If not, then they can move on. But again, it's very inexpensive for anyone that wants to become an elite or an ultra elite member. The link is down in the description portion of the video. That's all I have, guys. If you haven't already subbed to the channel, please make sure to subscribe by clicking that sub button. Make sure to turn your post notifications on as soon as you click that sub button by clicking the bell. And last but not least, drop me a like on the video if you found value in today's video content. Take care. I'll see everyone in the next one.